Okay, good morning, good afternoon, and good evening, and welcome to the LiveSquawk preview stream. For those new to LiveSquawk, we're a financial audio news service providing up to the second headlines and information for traders and investors alike. Try this out at livesquawk.com, see if it's something that may benefit your trading and your investing. If so, then by all means, please visit livesquawk.com for a bit more of an explanation as to what we do. Today is a recording ahead of Thursday's European Central Bank rate decision. So we're recording this on the Wednesday ahead of the Thursday meeting. And we're looking at the October rate announcement where we're expecting the central bank to cut interest rates by 25 basis points. I'll be joined today by Eric Culp. He'll help guide us through what's expected. Eric is LiveSquawk's European editor and reports from Frankfurt, which is also the home of the ECB. So just a quick look at the expectations then. So the headline, the main rate, expected to see a 25 basis point cut tomorrow. And we're also looking for cuts to the two other, the marginal lending facility and deposit rate facility as well. So with that in mind, I'd like to bring in Eric to help to talk about it and to go over really the main pointers and what people will be looking at tomorrow going into the meeting. Eric.
Hey, Harry. Yeah, good to be here. What they'll be looking at tomorrow, other than the color of Ms. Lagarde's brooch, probably is what the bank is going to do in December. I mean, it's pretty clear they're going to cut tomorrow by 25 basis points. Almost everybody's expecting it. And I guess it's to be expected if you look at the situation with both inflation and growth falling. I think the big concern right now is recession, especially in Germany. Some estimates say Germany's responsible for 30% of Eurozone GDP. So you don't want the motor stalling. But unfortunately, that's exactly what it looks like right now. If you look at manufacturing PMI for last month, it's at 40, right? 40 and change. That's the lowest in a year. That's crazy low. The composite for the country is also sub 50. It's at 47.5. That's where it all starts. And if you keep looking at the numbers, all the big four, Germany, France, Italy, and Spain, three of them are sub 50, right? So it's clear that there are growth problems here. That's the ECB can act on growth by cutting rates, but their primary and the main concern is inflation. Fortunately for them, at a time if they want to cut, they can, because the headline annual inflation rate has fallen below their target. Last month, it's still preliminary data. The final number comes out tomorrow before the decision is supposed to be announced. But the annual rate fell to 1.8%. So that's below the 2.0% that the ECB target has for over the midterm, and a drop from 2.2 in August. These are all, reasons for them to loosen up policy. The question, people at Deutsche are saying, are they going to pivot to even looser policy tomorrow? And you have to watch the press conference to figure that out.
This is interesting. So, I mean, in terms of we've gone from at the end of the last meeting, okay, well, we may have to wait around for another 25 basis point cut before year end, to potentially having sequential cuts now between now and at least the early part of next year. Where's this come from? Why are we looking now? Like you say, that in some of the measurement, the survey evidence has shown that Germany, the largest contributor to the Eurozone, is having issues or has had issues. This is not new. We're not looking at something that hasn't been around for a while now. And these gauges have been on the slide for quite a while.
Well, it's could be Christmas spirit. I don't know, but I think it's clearly growth. The numbers have been pointing downward for a while, but when the German economy ministry comes out and says, guess what, we're going to have a contraction of 0.2% this year. This is all new information. It was not long after the economic institutes in Germany came out and said there's going to be 0 to negative growth. And then, I think everybody's looking for signs of hope. Industrial production rose unexpectedly in August. And I think some analysts looked at that and said, oh, wow, look, there might be something that we can actually sink our teeth into here, that maybe the rebound's starting to happen. And the economics ministry squashed that immediately and said, yeah, we don't see recovery in the industrial sector.
Okay.
It's been happening. It's just, I think there might have been a period of that some people were thinking, it's going to be a soft landing. Yeah, it's it's not going to be a recession. It looks like Germany was in recession in Q2 and Q3 right now. Again, fortunate. I think there's a number of fortunate factors. Inflation's dropping, oil prices, as long as the shooting war in the Middle East doesn't expand, to a full-blown conflict that sucks Iran in and everybody else, and impacts the oil market and just drives prices. I mean, that's continuing to pull prices down, and that is giving the European central bankers fertile ground for rate cuts. I mean, oh, look, it's their headline rate is already under their target, even though there's a recent poll came out from IFO saying that, inflation's expected to rise over the next few months.
And sorry, just to be clear, that target is set at 2% for most central banks, 2% inflation target, and they use that as their benchmark level to judge whether the inflation is running too hot or running too coolly. That's probably a decent summing up, I suppose.
Yeah, also core rate's still a little high, and it's been kind of stubborn, right? But I think at a time when growth is becoming more and more the concern amongst the general council members, then they can say, core rate, schmore rate. Let's look at the main rate, and that's what we're going to go off of right now. We can actually cut now. We can cut now. We can cut now. Everybody should be happy. You already have policymakers there, especially Lagarde, warning that the transmission time from a rate cut to when it actually affects the economy and people start borrowing more money to pump into the economy, there's a lag, and there's also the European or the German economy ministry is suggesting that growth is going to pick up sometime next year. You hear that a lot here in Germany. Sometime next year, sometime in the next few months. It just hasn't happened yet. That's really, it's almost like a delaying tactic. It's going to happen. It's forced optimism. The Germans have a word for it.
And but again, it's not just in Germany. I mean, we look at France and the situation there at the moment, and their worries over their deficit. They're going to have to pull in their purse strings as well in the very near future, and that in itself has a slowing factor and an anchoring factor on growth, I guess. So I mean, we're looking at a multi-factor issue here. Oil prices, as we've seen of late, they're starting to move back up because of the involvement of Iran, I guess, in the Middle East issue at the moment. I don't want to call it a war, but like you say, crisis. So there are a number of negative factors, a number of risks out there that probably, I guess, front-running central bankers' thoughts at the moment, for some central banks anyway, but for the ECB predominantly. I think, and this is what we've been looking at, and this is what banks are saying at the moment, that a lot of the banks have now started to change their forecasts. I'm reading from Bank of America Securities here, Global Research, and they say we recently changed our ECB call to a rate cut in October, followed by back-to-back cuts of 25 basis points each, taking the deposit rate back to 2% by June 2025. Of course, earlier than our previous forecast. We also brought forward the 2 additional cuts we had initially expected in 2026, and we now expect quarterly cuts in September and December 25 to a terminal rate of 1.5%. I'm getting a bit of ahead of ourselves on this one, but I mean, this is the landscape now, and it's changed from what we were looking at before, I guess.
Yeah, the trigger was clearly the September inflation number. That was, now whether the rest of the environment was already contributing to hopes and thoughts of looser policy. As soon as that number came in sub 2%, that's when everybody started adjusting their forecasts. They're like, okay, this is clearly going to change how they think at the ECB. And that wasn't very long after they had already kind of talked around the possibility of an October cut after the September cut. That's only 4 weeks ago, right? So this is also a fairly small time frame too. Normally it's a 6-week Yeah, it depends on what the scheduling is, right? And so now they're down in Slovenia at the Bank of Slovenia making the decision for tomorrow.
That's right. Just to talk us quickly through that. What's the thinking behind moving? I mean, they have it in Estonia as well, don't they? What's the thinking in moving it away from Frankfurt, or is it just?
Yeah, once a year, I think they want to say, hey, you guys are all part of the big European central bank family, the
Mm,
euro system, and so they usually go to a foreign bank or a bank outside of it's not foreign, is it? Everybody's in the same eurozone, but they go to a bank outside of Frankfurt once a year generally, and I don't think Slovenia's been there yet. Slovenia's a pretty new member too,
yeah. Yeah,
so
so it's their turn, I guess.
yeah,
Just to sort of wrap this up, in terms of there's a really good, is it ING that brings out this scenario
yeah, it is, yeah.
analysis? So give them their dues. ING bring out this table every time we have a rate decision, and it's a scenario analysis how to position for Lagarde's alternatives. Now, you and I have sat through a number of these ECB press conferences and
A number is putting it lightly.
slept through, sat through, whatever you want to call it.
Yeah.
Then they're not the easiest of things to look at or to listen to at times, or to keep the attention of the audience. But where do we see? Where do you put tomorrow or Thursday's decision in terms of language and where do you think they might want to be position themselves, or rather, where do you think the markets and the banks think they'll position themselves?
Well, Deutsche had talked about a pivot. Deutsche Bank in their latest comment or their preview on this, and it seems like fairly good logic. The pivot, schmivot, is how big is the pivot? The fact that they're going to go looser, but that's dictated by the environment. I think they've been preaching data dependency since for months now. But I think partially because Lagarde had the tendency of getting ahead of herself and saying there'll be no forward guidance and then giving forward guidance, much to the chagrin of her handlers and probably to the joy of everybody who trades in the markets. But I think she's been really, really circumspect as of late, probably the past 3 months.
Mm.
She doesn't talk a lot about the future. It's almost like you can see she's about to say something, and it's something that little voice says, no, 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 you're not allowed to do that. I think growth is going to be one of the big topics because inflation has presented itself in a way that it's green lights, rate cuts, right?
Yeah.
They're sub 2 now. Even if it goes back above 2, it's 2 medium term. And I think, they're good now from an inflation standpoint. They can clearly say, yeah, we're going to cut. And if they want to spur growth, then that's the way to do it. And they can say, because everybody knows inflation is, it's within the area where they can make a decision to lower rates. So now they can say, well, we got growth here too. So yeah, we're looking at growth right now. And growth risk to the downside. To the downside now, when Germany was probably already in recession, and it's still
Yeah.
to the downside. I think there'll be a lot of talk about growth. Yeah, I don't know, and maybe what other central banks are doing. Perhaps the international situation right now, oil. Like you said, oil that's a driver for energy prices, right?
Yeah,
So as
and
long as
it will be a
yeah,
factor, and also I think there are some base effects that will fall out next month from a number of nations. So we'll start seeing, like you said before, the inflation aspects will start to kick in a little bit to the upside, and just we're likely to see a little tick up for some nations, but how sustainable that is another question. But on the growth side as well, I mean, I think we haven't had. Well, look, you look at the US. It's nowhere near as bad as people think. For the UK, it's been tepid and nothing better than that for a period of time. I think there's a divergence you're seeing amongst the major nations in terms of growth aspects. So, and that should continue, I think.
yeah, that's a good point. I'm wondering if the eurozone is somewhere in the between those,
Mm,
because the UK had to deal with Brexit, and quite frankly, it hasn't helped. Just ask business in general. Now, whether or not the government is getting a grip on that and trade is starting to normalize, I don't know enough about it. But
mm,
Europe has its own problems. let's hope they don't get any worse politics wise, because it seems to be getting a little bit crazy over here.
Yeah.
But I think it's going to take a little while. It's just, the pandemic kicked off these wild vacillations in pricing, supply, and we're still feeling it all this time later, I think.
Mm.
And these are examples now that I think governments and central banks are trying to flatten these waves.
Mm.
You growth crash, growth crash, growth crash, and um, we'll see if the European Central Bank is successful at it. We're going to see how the Fed has handled it, which so far, the United States, it's a completely different economy than what's
Yeah,
going on
yeah.
here in Europe.
Yeah, it's run on different, and also the overseas risk in terms of external factors, the Chinese situation, and whether we do see meaningful tariffs on Chinese EVs is going to be another thing that will play into this picture for the European Central Bank over time as well. So I think there's enough risks out on the horizon that no one will fault the ECB for cutting tomorrow if it does choose to do so, or signalling that there may still be that there is more in the pipeline in the nearer future, I guess.
Yeah, I think that the people who want lower borrowing rates are going to be happy at Christmas time, and
Yeah.
German manufacturers. I think there's a lot of problems affecting Germany, and the car market's a good place to start.
Mm.
And we'll have to see, can they retool? Can they compete with electrics? The fact that Volkswagen is thinking about closing shops, that's like that news hit like a 2,000-pound bomb.
Yeah. Yeah. I mean, this is all, you're looking at a monumental shift in manufacturing if that's the case. Volkswagen, engine of the, or was it Volkswagen literally means, was it car of the people?
People's car, yeah.
People's car. If we're looking at a stall like Volkswagen having issues and looking to close factories in its home nation and in the heart of Europe, there's some recalibration I think Europe as a whole has to do in terms of trying to either keep up with where it wants to be on the global stage, really, or how it wants to treat competitors in that field, which obviously China is one. Anyway, these are probably conversations for another day. Just to finish off today's chat, really. So we've got that. I've put up the scenario analysis out there in terms of guidance. Then we go back to the Bank of America, and they think guidance will be muted rather, and not really put more significance into rate cuts past the current meeting. There'll be data. I think the likelihood is we'll see the phrase data dependent remain in the actual statement itself. Do you see any other major changes to anything they might want to give us in terms of guidance and the statement itself?
No, I think there'll be a lot of focus on what the vote was, and it'll be consensus. I'm pretty sure it'll be unanimous this time around. Again, conventional wisdom is that the inflation rate has just basically opened the floodgates.
Mm.
And until that changes drastically, or it looks like there might be reinflation, which doesn't seem likely for a while, it might tick up and down. As long as it's hovering around the 2 mark, there's who's going to go against this? Who's going to say, we don't want this? At a time when growth is pretty weak in most of the euro area, they look bad at home. And they're central bankers, not politicians, but still, they probably want to be a little popular.
You'd like to think so. It might help the sugar take the medicine down a bit more if they are a bit more popular and people trust them, I guess.
Yeah.
Okay. Right. Well, listen, Eric, thank you very much for that. As I said, we just wanted to present a short preview ahead of tomorrow's ECB rate announcement. The details on when it is. So, Eric, when is the announcement and when is the press conference?
Yeah, it's 12:15 GMT, 14:15 Central European time, and then the presser. Well, that's the rate decision. The presser set for 12:45 GMT or 14:45 in Central Europe.
Awesome. Thank you very much for that. And also, I mean, one thing to note, we often get sources stories out soon after the press conference finishes. So for those, be aware of that. When I say sources, these are anonymous headlines that come from, how would you put it, Eric, again, in terms of sources?
Well, there, some people at some of the wire services have contacts within the governing council or their offices. And members of the governing council who are not allowed to talk or don't want to speak on the record, they will, voice their opinions via journalists that send out the data.
Couldn't put it better myself. Thank you very much. So keep an eye out for those after the event as well. But yes, so if anyone wants to listen in to the rate decision live, take a trial of LiveSquawk.com, see how we work, see what we're about, and see if it's something that would aid your trading or investing day. And this will be online in the coming hours. Thank you for listening. LiveSquawk.com is who we are, and we'll be back again with another program in the near future. Thank you very much. Thank you, Eric.